think what you need to do is program something around it, but the actual money itself should not be programmable at the end. Because if you could sit there and you can, put limits on it or impose some restrictions on it, it's no longer money. It's a coupon. It's something that will convert to money at some point in time. So these things, again, not to get too philosophical about these topics, but fundamentally, CBDC it should always be in its purest form something that is unencumbered, that doesn't have any restrictions, it doesn't have any controls.
This is the second part of a two-part conversation with John Velissarios on the topic of central bank digital currencies.
Yeah, it's really interesting that I've seen like a lot of kind of concerns around privacy, like you've mentioned there. And it seems like the Bank of England, like you said, really understood that. And that was like one of the paramount fundamental pillars of their proposal for the digital pound, was that, privacy is super important to all the people in the country. So that's going to be one of the things that we design based around. And I think they use the term around, we won't be able to monitor any individual data, but we'll monitor aggregate data that we need. And that's quite an important thing. Another concern that I've seen, and maybe this is a more Western thing, is around control, right? Like, it's privacy and control, two fundamental pillars of Web3 technologies. And there's a lot of people who are up in arms about the idea of a CBDC in which, the government can just all of a sudden say, you got 10 grand in the bank. Well, that's CBDC. We're no longer going to give you access to that 10 grand. What do you think to that? What do you say to that?
I think this is a big challenge for any central bank, any government, in its ability to impose these kind of restrictions. I mean, whether it's a CBDC or whether it's freezing your bank account, I mean, I think at the end of the day, the effect is the same, right? And I never thought I'd say, I look at sort of what happened, not that long ago with, the freezing of accounts for people in Canada for the protests that were taking place in front of Parliament, right? And I think that I never thought I would actually see that happen in my life. I think, in terms of people that are objecting something that the government is doing, and then all of a sudden, they have their funds frozen, their accounts frozen, and an inability to transact and to basically live a normal day-to-day life, pay for daycare, pay for groceries, pay for whatever, get paid, and all sorts of stuff. So whether it's money in the bank or money in a CBDC, I think it's, if that happens, we need a better government. I think at the end of the day, we don't need governments that do that kind of stuff to its people. I think it's a very, it is a big concern. But if that is the fact that if that does happen, then we end up in a situation where, people lose faith, people lose trust, just like that event that took place, and it has a long-lasting effect on societies and so on. So, not to get too philosophical on the topic, I think at the end it becomes, I think something that will have to play itself out, I think, with regards to how society deals with governments that, impose too much controls on their financial situations and things like that. Ability to convert it. I mean, I think at the end, I think many CBDC projects look at sort of CBDC as a complement to cash, not as a replacement for cash. So, you always have the ability, in theory, I guess, depending on where it gets rolled out, you always have the ability to convert that into cash if you needed to, or into something else. But at the end, it's a concern that, we should all have, and we should always think about how the role the government plays in our day-to-day lives. But that's again, a broader topic, not necessarily one for just this podcast.
Yeah, exactly. I think it's important to address, right? Because you're seeing this word programmable, I think, programmable CBDC, that's already become something that people are starting to protest about on the streets. And I think if there's one thing I've learned, and you've echoed many times so far on today's show, is that it's all, the word CBDC in itself is not the problem. It's how you design it. You can design one in a bad way, that might program in lots of these kind of draconian measures, or you could design them in a more transparent way or a more private way that doesn't, there's a lot of spectra and lots of different properties you can have, right?
Right. And I think you mentioned something which I think is important to point out. We talk about programmability and CBDC, and I think anything that is programmable isn't necessarily a CBDC. I think what you need to do is program something around it, but the actual money itself should not be programmable at the end. Because if you could sit there and you can, put limits on it or impose some restrictions on it, it's no longer money. It's a coupon. It's something that will convert to money at some point in time. So these things, again, not to get too philosophical about these topics, but fundamentally, CBDC it should always be in its purest form something that is unencumbered, that doesn't have any restrictions, it doesn't have any controls. What you do with it is create a smart contract. You put some stuff around it. You put like an agreement, a legal agreement, and so on. But it should not be encumbered. Once you encumber it, you do something with it that restricts its usage, then all of a sudden it isn't CBDC. It's a coupon, it's a voucher, it's something else, but not that. And I think there's a lot of discussions around that point as well.
That's a really reassuring point, I think, and will be peace of mind for lots of people. But I really like that, actually, the distinction there, saying that's actually maybe not CBDC, that's like a coupon system. I like that, because that's the main thing people are worried about, and I agree with you completely that at the kind of base level, it should be like money. It should be neutral. So another kind of thing you could say,
it's a central bank liability.
Yes, exactly. And I think when people talk about this restrictive form, this coupon system that you referred to, people say that's not very Web3, right? So the next thing I wanted to touch on is, where does CBDC sit in the whole kind of landscape of Web3 in general, right? Is it a Web3? Does it sit within Web3? Is it kind of overlapping? Is it outside of that? Because obviously some of the technology overlaps, and we've talked about public blockchain, but where does it sit for you?
Yeah, I mean, I think again, you look at sort of Web3, and you look at sort of centralized versus decentralized, sort of who issues it, how do you use it, and so on. I think I guess if I look at Web3 is about sort of a new way of interacting with one another, where I can transact with you directly. I can exchange value. I can exchange assets. I can exchange things with you without needing to sort of deal with any other centralized party. The interesting thing, and I was thinking about this actually when I was in thinking about this session, the central bank digital currency is a CBDC is a central bank digital currency issued by a central bank. So it's a centralized authority by definition, right? At the end of the day, that issues it. But once it puts it out of the circulation, it's just like a banknote. It has no control, or shouldn't have control, of how I spend it and how I use it. It's my money at the end of the day. So at that point, it can go from person to person, and payments can be made, and in a sort of distributed way, in a decentralized way, in a way that isn't necessarily requires some central authority to approve the transaction that is being made. And that again comes back to the design of these CBDC solutions. It comes back to how it gets implemented and rolled out. But the idea is that once I have my money and it's in digital format, I can give it to you, Jack, and give it to Alec, and so on. And I don't need to go through my bank in order to do that. I can do it directly, peer to peer. I can even do it offline. I can even do it, without sort of, any type of limitation or control, which is exactly the way I could do it with the banknote. But I can now do it in a digital manner with you directly, at the other end of the line, basically.
Would it be fair to say that it's the issuance that's centralized, but then the transfer afterwards is kind of decentralized, distributed?
Correct. Yeah, distributed. I mean, the decentralized nature of it is the fact that you now distributed it into the marketplace. People are using it to transact with one another, exactly like they do with money at the end. But it also enables those exchanges to be done in a digital manner. And I think it plays to the strengths of Web3, even though it's counterintuitive in thinking that, hey, it's centralized central bank digital currencies, but in reality, it's used in a very distributed way across a wider marketplace. And I think, and that market doesn't have to be a physical one; it could be a virtual one or a digital one. And I think it creates more opportunities to use it in these type of digital sort of digital exchanges, a digital exchange of value, exchange of assets, exchange of services or whatever for money. And I think the important thing is that it's who is the backer of that, the currency that has been issued, is as opposed to a cryptocurrency or some stable coin, or this is something that has the backing of an entire country, of a nation. There's a unit of account, there's a store of value. It has that is something that is well understood in a market, in a geography, and even internationally as well, as opposed to something that may not have that as well.
That was about to be my next follow-up comment. Is you've talked about having these different currencies kind of all working in parallel. Like they're not just going to, CBDCs aren't going to replace cryptocurrencies, they aren't going to replace stable coins. You imagine there's a market for all of them. And I agree with that. I think, we need resilience, and resilience means options, right? If everyone's using one CBDC, what happens if that goes down? I really agree with that principle. And you kind of said that one of the main differences there is issuance and who's backing something. I mean, most of our listeners, the Web3 kind of listeners know about crypto, right? That's what brings most people to the space. In your mind, John, what are the main differences between crypto and CBDC? Is it just the issuance and just the backing, or is there more than that?
I think, the fundamental one is the backing. Like, who is the issuer? Who do you go to, basically to claim this value, and the issuer behind it, right? So, and I think that's a very important point, because also from an accounting point of view, I want to know that I'm being paid a certain amount of money for my salary or my payments and things like that, and it's denominated in a certain currency and so on. There's no fluctuation associated with it. You can argue a lot of things around that, but fundamentally, it's the issuer that is behind it. The technology as well, right? Obviously, is going to be different. It's not the same type of technology at the end of the day, but it's not the same one. There's an element of resilience behind it. If you have outages, and the availability, the integrity of it, and so on. Acceptance of the currency. I think at the end, if it's central banks are going through a tremendous amount of effort to make sure that the legislation, the laws, the regulations, and everything that go around sort of the issuance of CBDCs makes them legally valid to be used in all types of transactions, right? At the end of the day. So everyone should be able to accept them, from a merchant to a cab driver to a whatever, right? A government or whatever. So the acceptance of the currency itself. So even though it's digital in nature, it should be accepted widely in the marketplace as a form of payment, right? At the end of the day. So that's not the case with the crypto, because people speculate a lot with crypto. They don't necessarily use it for transactions all the time. Some people do, some people don't, some people accept it, some won't. So you end up with this myriad of different usage scenarios for crypto, right? And I think not to say that there isn't a role and a place for it. And I think there's, to your point, Alec, I think you mentioned, and I firmly believe that there's a role for all the stuff at the end of the day, from crypto to stable coins to to CBDCs and so on. It's almost like a tapestry of different formats of money, right? At the end of the day. And they serve different purposes. They serve different, they do different things, and they serve different purposes. They're backed by different sort of backers behind it. And I think it's up to us to figure out what's the most appropriate for the things that we're trying to use it for.
Yeah, I think so. I understood that early on with CBDC versus crypto, and then someone said to me, "Okay, why would I choose a stable coin over a CBDC? They're similar kind of principles, centrally backed. Someone's actually kind of, it holds responsibility there, but surely I trust a central bank over a private company." So what's the argument there then between the two?
It's a very good point. I think especially when you end up with commercial banks that are issuing these things. I think the interesting dimension is that a commercial bank may issue a stable coin that has a very broad geographic reach. So take a very big bank, for instance, that has presence in every single country or many countries around the world. you now have the ability to move that money across this institution. If you're a commercial entity, if you're a big corporate or whatever, you can move money from one jurisdiction to the next one instantaneously, and make treasury payments and make all sorts of payroll payments and pay your suppliers and do all that kind of stuff. And you're dealing with a commercial bank liability, not a central bank liability. Some commercial banks are very big, very solid in terms of the credit rating and all that kind of stuff. So they almost, but not quite, are as strong as a central bank digital currency, because they're not a country, they're not a sovereign, but they have a geographic dimension to them that is more international, or more geographically dispersed than one single central bank in one particular country or jurisdiction. So I think that dimension of it actually opens up a lot of opportunities. And I think big players, big commercial banks are looking at issuing, or have been issuing their own, and have been transacting, allowing their customers to use their, basically their tokenized balance sheet. They take their balance sheet and they say, we're going to issue, based on our balance sheet, a bunch of tokens, and you can use these denominated in dollars and euro, or denominated in a currency, but you can use them to do all sorts of payments across our entire sort of network of entities. And I think that, again, it creates almost, again, that tapestry, right? So it's a commercial bank liability, tokenized commercial bank liability that is used across geographic boundaries to serve commercial needs. Very different than crypto. Again, very different than a CBDC. Different type of usage scenario for that.
So I saw that there was lots of fear and lots of, say, private banks that were kind of resisting CBDCs, right? Because what's the term they use? Disintermediation, which I think is such a difficult word to say, but that's the term that's used. And I saw that there was a lot of resistance to the digital pound specifically, and the Bank of England recognized this, right? They were like, okay, well, we're going to ensure that the digital pound isn't interest bearing. So you put it in the bank, you don't get any money from that. So that's one way to kind of limit the fear from private banks that everyone's going to move into this digital pound. I see you shaking your head. The other one was they're going to put caps on it, so you can only hold so much. And did those two things address in your mind enough that private banks can feel safe that not everyone's going to jump into digital pound as soon as it becomes available?
I think I think it's sort of it's an interesting scenario, right? It's an interesting sort of concern that commercial banks have, and I think the reason for it is, of course, that sort of the services that they're providing, for, especially for just basically transaction banking, comes out of, there's a cost associated with it. Consumers bearing that cost, as well as the banks as well, that are providing these services, but they're not. But it doesn't. The CBDC, when issued, doesn't do a lot of things that a commercial bank will do. It doesn't provide lending. It doesn't provide the relationship manager, insurance. It doesn't provide any of the things that a commercial bank, when sort of offering services to clients, does. Mortgages, credit, credit cards, loans, insurance, the portfolio of services, investment, and all this other stuff. So to think that everyone will sort of take all their money out of their bank and hold it in their CBDC wallet is a bit of a stretch, I think at the end of the day. And if you did it, how long would you do it for? Would you take it all out knowing that you can take it out, and then what you can do with it, put it back the next day or something like that? So usually that, it's sort of it's a concern, of course, that the banks do have, but they have it more in times of financial distress than they do in a normal day-to-day operation of things. Because again, when you have a banking relationship, it's more of a relationship. You're doing things with your money. It's not just using it in a form just to make payments and to hold a digital wallet. So I think it's the financial distress part of it. When a bank is in financial distress and then everybody panics, right? Well, what causes the panic? The panic is caused by the fact that you cannot take enough money out of an ATM machine or out of a teller to cover the deposits, right? Because of course there isn't enough money. That's fractional reserve banking. So of course you're going to have a problem when that happens, and limiting sort of it on a CBDC is just going to further create the panic. The way to solve that problem is actually to have backstop measures with a central bank, the Bank of England, or other banks, central banks, that basically can digitally issue that money immediately to consumers in times of financial distress. So if I have, let's say, 20,000 pounds in my account, and all of a sudden I hear that sort of this bank is under distress, I can't get enough money out of an ATM machine, right? Because everyone will be doing the same. But if there was enough money in the ATM machine, the digital ATM machine, right, I could get it all out. And what would I do with it the next day? I'd probably go back and put it back into the account. So it's like, as long as I can get it out, right, I think, and feel that level of comfort. So the physical limitation of the banknote distribution causes the panic in many cases. The ability for central banks to step in and digitally support the commercial bank is a way to actually address that, and acts as a backstop measure for run on banks and things like that. So I'm not sure the limit on the wallet actually will do anything apart from maybe even cause more distress.
I'm really glad you mentioned kind of the failure cases and the worst case that can happen kind of when you have a run on the banks type scenario, and the impact on consumers and the need to protect consumers, because obviously that's also what the role of regulation is, right? And it's not something we like to shy away from on the show. We're very much pro regulation, and I have no idea what regulation means in the context of CBDC. So can you just give us a comment on that, right? So I'm kind of wondering, do we have the existing regulatory tools to handle and map to a CBDC world, or do we need completely new frameworks to handle them? What's the kind of situation with that?
It's a broad, again, very jurisdiction specific. I think the understanding of whether the existing central bank charter or act in many cases covers the distribution of money in digital format or not can be as simple as a one statement in a legislation, or a very complex series of changes actually to the legislation. So it really depends, jurisdiction by jurisdiction, and it requires proper legal analysis and stuff like that in order to be able to make these kind of changes as well. However, I think that none of that is insurmountable at the end. It's just different. It's how you look at the charter of the central banks and how they're able to actually issue a digital currency, and the kind of regulation that needs to go around that. And I think, I mean, we have a lot of stuff through electronic money, electronic money regulation, and other types of regulations that already exist today. This is an extension of many of that. I mean, not to simplify it, but there are a lot of things that we already know how to deal with a lot of these different things. The challenge here is that central banks have never really had to look at digital money for the for the wider market usage. They've always looked at it from a banknote printing, very physical, very, very legacy, very traditional way of dealing with money and money printing. And that has things around velocity of money movement, how banknotes are put into circulation, how they're distributed, how they're recovered, and things like that. And then when you all of a sudden say, okay, well, that's great for very traditional paper-based means, you're now going into a digital format. How do you deal with velocity of money movement there? How do you deal with anti-money laundering regulation there? How do you deal with KYC stuff? Does it still apply? Do you enable visitors to transact in central bank money? Right. Well, if you're a tourist that steps off a plane and you try to go withdraw money from the bank machine and there's no banknotes anymore because no one's using that, well, what are they going to do? And how are they going to make payments, right? And how do they? So what do you deal with? How do you deal with that kind of a scenario? And who's allowed to? Who should have access to this money? Is it citizens? Is it residents? Is it foreigners? Is it visitors? Is it and that kind of stuff? So those are the kind of things that you need to think about a lot from a central bank point of view. And I think that creates an interesting sort of a set of constraints, parameters as well to the regulation and the legislation that needs to be featured into that. I think at the end also that if you can create a number of very advanced tools that you introduce into the market, and all of a sudden you find that those could be things that compete with incumbents that are there. It comes back to the question of what is a bank at the end, right? So if I'm a payment service provider, I mean, take a look at all the different fintechs and the neobanks that have popped up. At the end of the day, they're challenging many of the major sort of commercial banks. Now imagine enabling them with CBDC, or even new entrants into the market with CBDC capabilities. The concept of what is a bank changes actually. Is it a, and you now have new tools that you can use to sort of enable these kind of new entrants into the market.
I love that it's taken us an hour and we've come full circle, and the question we've got to is, what is a bank? It just shows how complicated this topic is sometimes, right? But yeah,
It is
so
indeed, yeah.
regulation, very in the weeds, very kind of detail focused. Now to flip from that and go big picture, you've obviously been in the space for a long time. I think the stat that gets pulled out is 85% of central banks are considering CBDCs and have various projects at various stages. What does it look like to you? What is the future kind of end goal of CBDCs? And particularly, how do you think it's going to relate and intersect with other emerging technologies, like, to use all the buzzwords, AI, blockchain, metaverse, all this kind of stuff? How does the future utopia of CBDCs look like in John's world?
Yeah, I mean, I think the success or failure, I mean, I think of all these implementations is how pervasive they become and how invisible they become, right? At the end of the day. I've been in sort of the technology field for many years, and I think we talked a lot about, certain types of technologies many years ago. And then all of a sudden we stopped talking about it because it was absolutely everywhere. Right. And I think this is going to be one of those things. I think we will at some point, I don't know when it's going to be, but it'll be a point where this topic will no longer be on podcasts and things like that. It'll be a mainstream topic. No one will know, no one will care that much about it anymore because it'll be everywhere, right, at the end. And then we'll have other types of things to talk about, right? And I think it's almost like a race. I think there's a few things I think on this topic that I find is intriguing. One is the geopolitical nature of it, and what is money, and what does it mean, right, for governments, for economies, for many countries around the world, for every country around the world. But for some, it means even more because they become the rest of the world is reliant on them. So I think that I think the success of this topic is really in how invisible it becomes in 5 years time or whatever, right? 5-10 years time, whenever that gets, becomes much more mainstream and deployed. I think it's almost like the genie's out of the bottle. We're now sort of seeing these implementations and these rollouts, and there's a lot of investment that's going into it because it's solving a certain set of problems that we can now solve that we've never been able to solve before. And I think it's actually very interesting for the wider market, governments, central banks, economies, and so on. Taking it back, I think, to sort of, Web3, AI, all these different sort of new paradigms of interacting and dealing and exchanging ideas, values, services, products, entertainment, and all these different things. This could be the money that goes into this as well, right? So at the end of the day, rather than dealing with tokens of whatever nature you're dealing with, the money directly. And I know that it's sort of this is a medium of exchange of value at the end. And you now have these digital platforms where you can interact with one another, and ideally you need to also have a means of exchanging this value in order to acquire goods, services, and all these other and various sort of products and services and exchanges that you have with various people on these platforms. So I think they will CBDCs will play a role in that in the future, no doubt, like other cryptocurrencies, like other stable coins, like other type of tokens, or whatever it is that you're exchanging in these environments. With regards to AI, I'm not sure yet actually about the AI and how CBDCs and AI sort of come together. But I know that there is obviously a convergence there at some point. I think that with metaverse, with sort of virtual environments, these things are been designed in a way to sort of converge into one another, and they will. How that will play out and what it will look like, I think, is still unknown. I think it's still a bit out there, but you can imagine all sorts of different things that you can do with this when you start exploring the art of the possible.
Well, I definitely resonated with me talking about the kind of the end state being how invisible it all is, right? That being a success metric, and we all have our central bank digital plumbing, as we often call it, on this show. I think that will be the metric of success. So,
Yeah.
John, it's been a real pleasure to have you on the show. I've learned so much. I've been pretty much just listening to you
Thank
the
you.
whole time. We have two very quick closing questions that we like to ask each guest and see how answers compare over time. And I think you've already answered the first one really nicely and succinctly earlier, but I'm going to ask you to do it again. So you have a chance to revise if you want to. I don't think you need to, but I want to ask you first. So in one sentence, what is Web3 to you?
It's really sort of an environment where you can exchange value directly between people. That's what it means to me. I think when I think about this, it isn't sort of a centralized platform. It's basically something that allows us to engage and interact with one another without the need of any other intermediary in the middle of it all. And I think that's something that's possible now, enabled by CBDCs, but also wider sort of the wider sort of environment that Web3 enables as well. Sorry, that's a bit longer than a sentence, but I think that you get the point.
No, I 100% agree. We never get one sentence. I'll just tell you that for now.
Okay.
Awesome. And so the final question I have for you then, just to close things off, is so if you could pick one person that can be with us today or from any time throughout history to sit down and discuss Web3 with, who would that be and why?
I thought about this actually as well, and I think that given where we are, given all the innovations and the developments that we've been talking about, especially around the digital currency side of things and so on, I think our someone like a Satoshi would be a wonderful person that we would be able to talk to if we knew who he was, right, or she, or whoever that person is. That I think. I think that would be very intriguing to understand whether that was ever part of the plan and the long-term vision in terms of the plan of introducing Bitcoin into the wider market. And that person had a vision. Again, it was a genie letting a genie out of a bottle at the end of the day. And I think it would be very interesting to understand, what vision they had of the wider impact that they would have, not only on the money side, not only on that, but in terms of the wider ecosystem that this would develop around that. It would be intriguing to have that conversation with them, whoever that person is.
That's a good one. I think that might be the fourth time we've heard that answer. I did expect every single guest to say Satoshi, but yeah, it's the fourth one. So the most popular answer so far, and definitely a good one. I mean, thank you for joining us, John. This has been a really great episode. And thank you to those listening, wherever you may be. And join us next time as we untangle a little more of Web3. Thanks for tuning in to another episode of Untangling Web3, produced by Emma Camilleri.
Don't forget to send us your thoughts, questions, and comments on social media, and be sure to follow us on your favorite podcast provider to catch the next episode. See you next time to untangle a little bit more of Web3.
The views we express here are our own and do not reflect the views of our employers.